Welcome to TalkTickers. Our job here is pretty simple. We cut through all the noise from earnings calls and really pull out the key nuggets you need to know.
Exactly.
Today, we're doing a deep dive into ClearSign Technologies, that's CLSN, looking at their first quarter 2025 results call. We've gone through it, and we're here to get you up to speed quickly on what really matters.
That's right. And, while the headline numbers for Q1 might look a certain way, management spent a lot of time on the call talking about operational progress. And these forward-looking indicators they see as really crucial.
Okay.
So we'll unpack, both the financials they reported and those detailed business updates they gave.
Right, let's do that. Let's start with that snapshot, the numbers. For Q1 2025, ClearSign reported revenue about $400,000.
Yeah, approximately $400K, which is, quite a bit down from the $1.1 million they did in Q1 of 2024.
Okay, quite a drop. What was the reason they gave?
The main reason was lower process burner shipments this quarter. Last year's Q1 had more of those. This year, the revenue was mostly from spare parts orders.
Got it. Okay. And the net loss, that went up.
It did, yeah. Increased by roughly $1 million compared to the first quarter of last year.
And the drivers for that?
Well, they pointed to two main things. That lower sales volume we just talked about and some pretty significant legal fees hitting the books this quarter.
Okay, legal fees, we'll probably circle back to that. How about cash flow?
Net cash used in operations was pretty steady, actually, around $1.1 million this Q1 compared to $1 million in Q1 2024, so relatively flat.
And where did they end the quarter cash-wise?
They finished Q1 with approximately $12.8 million in cash and cash equivalents.
All right. And lastly, share count.
As of March 31st, 2025, it stood at about 52.4 million shares outstanding.
Okay, so let's dig a bit deeper then. You mentioned those legal fees impacting the net loss. Can you give us some more detail there?
Sure. The total legal fees they called out were $581,000 for the quarter. They broke that down a bit. About $131,000 was related to some ongoing work from a 2020 SEC inquiry. But the bigger piece, $450,000. That was incurred by a special committee of the board.
A special committee? For what?
It was set up to address stockholder director nominations that came in for the 2025 annual meeting.
Ah.
Okay.
Did they say anything about how long that might go on?
Yeah, management seemed to suggest that activity is nearing completion.
Sure.
So hopefully that specific chunk of fees might start to decrease going forward.
We'll see. And what about their overall cash position, the working capital? How do they view that?
They definitely emphasize that they feel their current cash balance puts them in a strong position, strong enough to scale the business.
And importantly,
they think it helps build confidence, with both their customers and their suppliers.
Yeah.
That cash cushion matters.
Right. It signals stability. Okay, so that's the financial side. But they really stressed, didn't they, that even without many press releases, it was a really busy quarter operationally.
Oh, absolutely. Very busy.
So let's dig into those updates. Maybe start with the product lines.
Sounds good. Let's start with the core process burners. They have those two large orders that are, key focuses right now.
Right. The big one in LA, 20 burners for that refinery. What's the status there?
Good news there. Those units are actually on site now. They're scheduled for installation in the third quarter of 2025. So coming up soon.
Okay. On site, install Q3. And the other big one, the 26 burners for the Gulf Coast Chemical Company.
That one's currently in final engineering and testing. The plan is for fabrication, shipment, and hopefully installation to happen later this year, later in 2025.
And management really sees these two as critical, don't they? Like catalysts.
Definitely. They talked about them serving as really significant references and establishing credibility with what they called household global name companies. Getting those installations done and performing well seems absolutely vital.
Yeah, getting those runs on the board makes sense. Okay, what about the flare product line?
Right, the flares. They mentioned a resurgence there, driven partly by regulations, it sounds like, and they've seen some recent traction.
And this product is what exactly?
It's basically their low NOx burner technology, but it's placed inside a big cylindrical vessel, an enclosed flare.
And it replaces older ones that don't meet emissions permits.
Exactly. And interestingly, the recent order they talked about was actually a repeat order. Same customer coming back for a second engineering project.
That's a good sign. Repeat business. What kind of value are we talking about for these flares?
Well, they gave some ranges. Burner-only orders, just the equipment, are typically in the $250,000 to $300,000 range,
Yeah.
which they noted is actually larger than a typical process burner order for them.
Okay. And if they provide the whole system?
If they supply the whole thing, including the vessel, the quotes can range quite a bit higher, $750,000 up to maybe $1.25 million, though they clarified the orders they have in-house right now are for the burner equipment itself.
Gotcha. And they mentioned some terminology confusion. Incinerator versus flare.
Yeah, just a clarification point. Sometimes these are called incinerators, sometimes enclosed ground flares, but functionally, in this context, they're doing the same thing, disposing of waste gas cleanly with low emissions.
Okay. Moving on, the M series. That's for the midstream market.
That's right, M series for midstream. They describe this as a product line that's generating growing interest. They highlighted a successful startup of a 3M1 burner at an Exotherm facility.
And are they seeing repeat interest there too?
Seems like it. They mentioned repeat inquiries and also sending recent quotes to established customers like Tulsi Midstream and DevCo. And that's for both new installations and retrofits, bringing existing burners up to current emission standards.
Right. And their strategy involves partners.
Yeah, leveraging channel partners is key here. They mentioned DevCo, Tulsi Midstream, Exotherm specifically. And they want to add other heater companies too, to really expand their reach and get traction with the major midstream players.
Okay, what about boiler burners? California market.
On boiler burners, they said California has been generally quiet lately, but they have seen a significant increase just recently in inquiries specifically for water tube boilers.
Oh, interesting. So they're acting on that.
Yes, they're actually modifying one of their M1 burners for that specific application.
Yeah.
And they mentioned an upcoming meeting with California Boiler to talk about sales planning for that market. So expect more news on that next time, they hinted.
Sounds like potential movement there. Okay, shifting from specific products, they also talked quite a bit about expanding sales channels and just general market acceptance growing.
They did. The Zico partnership was a point of focus. That agreement started back in December. Co-branding launched in March.
How's that progressing?
They said the marketing teams are working together, getting materials ready for the Zico sales force. They're anticipating the first inquiries coming in from the Zico team pretty soon.
Any feedback from Zico itself?
Yeah, they mentioned a really positive experience when they tested their burner at Zico's facility, but they also acknowledged, it's still early days.
Yeah.
The specific incentive structure for Zico's salespeople selling ClearSign products, that's still being worked out. It's just getting going.
Okay. Now, there was one data point management really seemed to lean on as a big forward indicator, the sales pipeline.
Oh, yeah. That was definitely a highlight for them.
Tell me about that. What did they share exactly?
Okay, so two key things. First, the number of quotations they've provided year to date this year has doubled compared to the same period last year.
Okay, doubling the number of quotes is good. That shows activity. But there was something about the value, wasn't there?
Exactly.
Yeah.
That was the kicker. The total value of those proposals they've sent out is just under 5 times the value from the same period last year.
Wow. 5 times the value. That's a massive jump. What do they say that actually means at this stage? Is it just quotes or?
They framed it as a very strong forward indicator of interest, of inquiries, and importantly, of their ability to meet customer needs with their tech. And this pipeline includes both standard process burner opportunities and those larger systems opportunities, like the flares.
So they see it as proof they're getting into bigger projects earlier.
That's exactly how they put it. They feel it shows they're getting into these significant projects at a much earlier stage in the customer's planning process.
And this ties into that feeling of growing market acceptance they talked about.
Perfectly. They feel ClearSign is finally becoming a known entity, that they're being taken seriously by the major industry players.
And things like engineer tours and conferences are helping.
Seems so. Their strategy of doing those engineer tours, attending key conferences, they specifically mentioned the American Petroleum Institute, the API meeting seems to be paying off.
Why is that API meeting so important?
Well, it brings together the key people, lead engineers from the big refineries, the heater manufacturers, the big consultants. It gives them direct one-on-one interaction opportunities they just couldn't get otherwise. Crucial face time.
So connecting the dots. They're getting included earlier by clients looking for low NOx solutions because of this increased acceptance and direct engagement.
That's the connection they made. And they see that reflected directly in those strong pipeline numbers. They even said this growing acceptance and pipeline growth is, quote, what we've been trying to get to for years.
So, like an inflection point.
They definitely seem to view it that way, yes.
Okay. Speaking of potential game changers, let's pivot to the ClearSign Eye sensor. That got quite a bit of airtime on the call.
It really did. And they positioned it as potentially disruptive technology. It's a flame detection device.
Right, and it replaces the old flame rod.
Exactly. Which, as they pointed out, is kind of hated in the industry. Apparently, they have repeated mechanical problems. They're unreliable. So it's targeting a known pain point.
Makes sense. So where are they with actually deploying this new sensor?
They gave some specifics. Right now, they have 4 demonstration units actually in production. These are for a prominent Gulf Coast super major refinery.
Okay, demonstration units. When will they be installed?
Expected installation is in the next couple of months. But here's what's really interesting.
What's that?
That same refinery has already requested a quotation from ClearSign for sensors for a second heater site.
Already? Before the first demo units are even fully installed and proven out?
Yeah, it suggests, maybe the initial talks or preliminary tests. Something has gone very well. It's definitely a positive sign.
Any other deployments happening?
Yes. They're also building sensors for their own ClearSign burners that are going into another Los Angeles refinery. And similar story there, a quotation has already been provided for a second heater location at that refinery too.
Okay. And these are quicker to make and install than burners?
That's what they indicated. Manufacturing time is around 12 weeks, and installation is relatively quick. The goal is for it to become more of a standard, off-the-shelf type item, even though it's still custom engineered for the specific heater. Faster turnaround.
Now, here's the part that really stood out to me. The market potential for this eye sensor.
Oh, absolutely. This is where it gets really interesting. Unlike their burners, this product is not related to NOx emissions or permitting requirements at all, meaning its application is potentially worldwide for every industrial heater out there that uses a flame sensor.
Wow. So the addressable market isn't limited by environmental regulations in specific regions.
Not at all. They were very clear on this. They stated this market vastly exceeds the addressable market for their process burners. It represents a huge number of potential opportunities.
Huge number. Did they quantify that at all?
They give an example. They mentioned the potential for thousands of opportunities at just one single super major refinery site. Multiply that globally.
Okay, that's potentially massive. But, potential is one thing. How quickly can they realistically expect this to translate into actual sales? What's the ramp up look like?
Yeah, they addressed that. Management acknowledged that, look, clients need to see it operate successfully in the field first. Build that confidence.
Sure.
So realistically, they expect to see real traction develop in maybe the 6 to 9 month time frame after these initial installations go live and perform well.
But maybe some earlier movement.
Possibly. They did suggest that commercial orders could potentially start picking up sooner, maybe within 3 to 6 months, especially if positive news about performance spreads quickly through the industry, which they think it will. Word gets around fast.
And there's synergy with their existing sales process, right?
Yes, that's a key advantage. It's sold to the exact same people, the fired equipment specialists at these refineries and plants, who are already their contacts for the burner business.
Yeah.
So it leverages their existing relationships.
Okay. So let's zoom out a bit again. Thinking about the broader investor context from the call, management kept circling back to the importance of getting these installations done, right? Gaining traction.
Definitely. Securing those initial installations, getting traction with these major global companies, and building out those channel partnerships like Zico that was reiterated as strategically crucial.
They also touched on efficiency as a selling point, didn't they?
They did. They referenced an ICF report that was sponsored by SoCalGas, which showed about a 4% efficiency increase for their boiler burner compared to an alternative technology.
And why is a 4% difference such a big deal?
Well, for these huge industrial operators, fuel is a massive cost. So that 4% efficiency gain, those fuel savings, could potentially allow ClearSign's premium price product to actually pay for itself over time.
Makes the economics more appealing.
Exactly. And they noted similar efficiency benefits for their M-series burner in those midstream applications too.
What about macro factors, things like tariffs, regulations? Did they comment on that?
They said they're seeing minimal current impact from tariffs. The bigger issue right now is just the uncertainty around tariffs, which can affect project financing timelines more than direct costs for ClearSign itself.
And regulations. Is their business tied to, say, shifts in Washington?
They clarified that their core business driver, the need for low NOx, is pretty stable. It's driven by existing EPA functions and regulations that aren't likely to change quickly. They see it as distinct from, say, potential government shifts promoting hydrogen technology, which they feel is probably years away from broadly impacting their specific markets anyway.
Okay. And one last thing, they briefly mentioned a collaboration with Narion.
Yeah, just a brief mention. Describe it as a long-term relationship focused on developing new technologies, potentially for high-tech industry. So maybe hinting at future product lines beyond their current focus, but very long-term.
So pulling it all together.
Yeah.
You've got the current financials, which, show challenges, revenue down, loss up.
Right. But overlaid with that, you have management painting this picture of really significant progress on getting key projects installed, a dramatically growing forward pipeline, and this huge potential with the new eye sensor product. It's definitely a complex picture.
Absolutely. Which brings us nicely to our This Is Not Financial Advice segment.
And let's be crystal clear. This is purely for illustrative purposes. It's based only on the information presented in the earnings call. It is absolutely not a recommendation or suggestion for how you should invest your money.
Couldn't say it better. But if you were a seasoned investor, someone comfortable with risk, listening to that call and trying to spot maybe an asymmetric opportunity the market might be missing, here's one perspective you might consider derived entirely from the call.
Okay. So you take management's report of that 5 times year-over-year increase in the value of the sales pipeline.
Right. You couple that with their description of the ClearSign eye sensor's market potential, how it's applicable worldwide, not tied to Nodex, represents a huge number of opportunities. They even threw out thousands at just one super major site.
And then you layer on management's own commentary about how ClearSign is finally being taken seriously, becoming a credible alternative, maybe even the only vendor for clients needing the absolute lowest Nodex.
Well, an experienced, risk-tolerant investor might look past the immediate quarter's results, the revenue dip, the increased loss. They could potentially frame the situation as the market may be underestimating the conversion potential of that much larger pipeline.
Right. And underestimating the sheer scale of the eye sensor market if, and it's a big if, those initial installations prove successful and word spreads like wildfire through the industry, like management hopes.
So it's a view that discounts the current short-term financials in favor of betting on those potential catalysts and that market scale that management says are finally starting to materialize after, years of effort, maybe a long position based on that future potential versus the present numbers.
And again, just hammering this home, this is not financial advice. It's purely an illustrative thought exercise based only on specific points made during the earnings call. Do your own research.
Absolutely. Okay, so let's wrap this up. The key positive takeaways management really wanted investors to hear from this call seem to be that significant progress on getting major projects installed and scheduled.
That substantial 5 times growth in the sales pipeline value as a key forward indicator.
The really high potential they discussed for the ClearSign eye sensor with its huge non-NOx dependent market.
And that increasing market acceptance they feel they're finally achieving, helped by expanding channel reach through partners like Zico, all leading, they hope, to getting into projects earlier.
And one last time, please remember, this entire discussion was strictly for informational purposes. We're summarizing the earnings call content. It should not be interpreted as financial advice or any kind of recommendation to buy or sell ClearSign stock or any other security.
So here's a final thought for you, the listener, to maybe chew on. With that sales pipeline showing that really significant jump in value and these new channels like Zico just starting to ramp up, what specific indicators or catalysts should you be watching for over the next few quarters? What will tell you how quickly, or even if, all this increased interest actually starts translating into reported financial performance? Something to think about.